Welcome to income tax class. So in this video I want to explain few important concepts related to income tax, and those are very important for short answers in the examination. So let us discuss all these concepts one by one. Assessee. First one, assessee. Who is an assessee from the Income Tax Act point of view? We should know who is an assessee first of all. Assessee means he is one person, and that person has to pay tax and he is liable to pay tax to the income tax department. We can call him as an assessee. He is liable to pay either income tax on his income, or he is liable to pay some interest or penalty, and that is due to the income tax department. So whenever he is liable to pay any income tax to the income tax department, or any interest or penalty is due to the income tax department, then we can call that party as assessee. So this definition is given in Income Tax Act 1961 for assessee. And here he is also one person on whom any proceedings has been taken by the income tax department for the assessment of his income. Suppose his income is exceeding the income tax exemption limit, then he is liable to pay tax to the income tax department. But he is not paying, then income tax department actually proceeds, and they will take some proceedings for the assessment of that particular person income, and we can call that person also as assessee. And if income tax department has to refund any money to him, then that time also we can call that person as a assessee. So here assessee means if any person is liable to pay tax to the income tax department, then we can call him as a assessee. And if any interest or penalty due to the income tax department by any person, we can call that person as a assessee. And if income tax department is taking any proceedings against him for the assessment of that person's income, then also we can call that person as a assessee. If any refund is due to him, suppose he paid extra income tax to the income tax department, and now the income tax department wants to refund some amount to him, then that time also we can call that party as a assessee. So under some situations we can call one person as a assessee. What are those situations? Let us discuss those all situations one by one. First one is for the assessment of his personal income. If one person has to pay tax or liable to pay tax on his income that he earned during the previous year period, then we can call that person as assessee. And next one is if a person on whom administrative proceedings are initiated. So income tax department actually is taking any proceedings against any person for the assessment of his income or anything else, then we can call that person as a assessee. And a person to whom refund is due. Just now I explained all these points. Here income tax department has to refund some amount to any person because that person had paid some extra tax. That is why some amount income tax department wants to refund to that party, then we can call that party as a assessee. Next, deemed assessee also is called assessee. Deemed assessee means, suppose if any topic deemed assessee we will discuss later. Just you can remember here deemed assessee. Actually deemed assessee means, suppose minor is there. Minor means actually the one who did not attain the age of 18 years and he is not eligible to enter into any contracts. So even if he earns income he should not pay tax directly to the income tax department. On behalf of minor, the other person should pay. So the person or the assessee who actually taking responsibility of paying tax on behalf of any minor, then we can call that assessee, that person as a deemed assessee. Okay, so next, assessee in default. People these all persons are treated as assessees from the income tax point of view. So hope this is clear. Let us go and discuss another concept. Person. Who is a person actually? Person definition is given under Income Tax Act 1961. So person includes following types of assessees. So person means who is a person. I have given list of so many persons here. Individual. Individual also is treated as person. Hindu undivided family also is treated as person. Company also is treated as person from the income tax point of view. Firm, partnership firm also is treated as person. Association of persons or body of individuals also called as person. Local authorities, every artificial judicial person. So these all are treated as persons under Income Tax Act 1961. Let us discuss all those ones one by one. So individual means one individual person, natural person. So we all are individuals, but we all are not treated as persons. If we are liable to pay tax on our income, if our income limit is exceeding, then if our income is exceeding, okay, so some exemptions are given under Income Tax Act. So if our income is exceeding the exemption limit, then we have to pay tax to the income tax department. So some exemptions will be given. For example, if we earn every year some amount of income, for example 3 lakhs, we need not to pay tax to the income tax department. For every year, if we earn 3 lakhs of income, we need not to pay tax. This is just an example. And if our income is more than 3 lakhs, it is beyond 3 lakhs, then we should pay tax. Whatever income that we are going to earn above 3 lakhs, on that we should pay tax to the income tax department. Then we are liable to pay tax. Then we are called as individuals. Okay, individual means natural person, but they should be liable to pay tax on their incomes. Then only we call them as we can call them as individuals. Let us discuss next one. Hindu undivided family. Actually, in India, we can see Hindu undivided families, joint Hindu families. They follow Hindu law. If parents, grandparents and their children are living together and doing business by following Hindu law, that businesses are known as Hindu undivided family businesses. If that Hindu undivided family earns income every year and that is above the exemption limit, they have to pay tax. But in family, so many persons are there, so many people are there, then who is liable to pay and who is responsible to pay tax? In Hindu undivided family, head of the family is called Karta. Karta always is assessed for income derived by the joint Hindu family. So he is responsible for payment of income tax on behalf of the family. Okay, and who will become Karta then? The eldest person in the family always will become Karta. So eldest one in the family will take responsibility of Karta. He will be called Karta. Other persons in the family are known as co-parceners. Co-parceners. Okay. So let us go and discuss next point, that is company. Joint stock companies. Company means it is an artificial person and that should be incorporated under Indian Companies Act 1956 or 2013. Any company which is established by registering its name under Indian Companies Act 1956 or 2013, it is treated as company. Company also is known as person under Income Tax Act 1961. And next one is firm. Firm means partnership firm. A partnership firm means if two or more than two persons are starting any business and doing the business, and they are registering the business under Indian Partnership Act 1932, and if they earn profits in the business, they are liable to pay tax to the income tax department. So then we can treat that partnership firm as person. Next one is association of persons or body of individuals. So group of persons, if any group of persons are promoting joint venture businesses, or they are acting as trustees of any trust, then they are treated as persons. Next, local authorities. Local authorities means municipalities, local bodies. These also are treated as persons from the income tax point of view. And next one is every artificial judicial person. Means if any person who is not falling under above all these categories 1 to 6 categories, we cannot treat them as either individual, Hindu undivided family, company, firm, okay, association of persons, local authority. If any one is not coming under all these above 1 to 6 categories, they will come under the seventh category. Okay, for example, a statutory corporation. This is about clear information regarding person from the income tax point of view. So let us go to the next topic, and that is assessment year. What is assessment year? Actually, assessment year means in which the income of one person is assessed to tax. Okay, so assessment year is a year in which he is liable to pay tax. That is a present year. So now at present assessment year is 2024 and 25. And here when actually it starts, always assessment year consists of 12 months period. 12 months period should be there, and it always starts from 1st April onwards and ends on 31st March of next year. If it starts from 1st April of this year, for example 2024, and 12 months period means it should end on 31st March of 2025. It is treated as assessment year. Assessment year means it is 12 months period, 12 months period, and it must start from 1st April of every year and must end on 31st of next year. Okay, our present assessment year is 2024 and 25. Means our present assessment year is starting from 1st April 2024 and ending on 31st March 2025. Okay. And let us discuss what is actually previous year also. Here in the first point you can see in assessment year, first one, there is a mistake in one sentence there. Assessment year means 12 months period. Okay, the of is printed here, so you can take it as assessment year means 12 months period. 12 months period. Assessment year means 12 months period. Hope this is clear. And continuation is starting from 1st April of every year and ending on 31st March of next year. And current assessment year is 2024 and 25. Hope this is clear. Just make some change there. Printing mistake. Let us go to next topic. And that is previous year. Previous year means actually it is 12 months period again. Here year means 12 months period only. And when actually it is going to start, previous year always is the year preceding 12 months period of the relevant assessment year. Our assessment year, present assessment year is 2024 and 25, and just before that, preceding to 2024 and 25, 12 months period is taken as previous year. So what is a 12 months period for previous year for 2024 and 25? That is 2023 and 24. 1st April 2024 to 31st March 2025 is present year or assessment year. Then what is a previous year? Just a 12 months period preceding to this period, preceding to assessment year period. 12 months period preceding to the assessment year period is known as previous year. So if our present year assessment year is 2024 and 25, previous year will be 2023-24. So previous year starts from April 1st to 2023 to 31st March 2024. Hope this is clear. So what is actually difference between this previous year and assessment year? If any person earns income during the previous year, so tax he should pay in the assessment year. So completely during the previous year, whatever income he earns, whatever profit he gets, on that he should pay tax in the assessment year. Okay, so assessment year means tax paying year, previous year means income earning. So whatever income he earns in the previous year, that is actually assessed to tax in the assessment year. Okay, is it clear? Hope this is clear for everyone. So we can call this previous year also as income year, because the income whatever people earn during the previous year, that will be taxed in the assessment year. Okay, so previous year actually is 1 year period, financial year period, which is just preceding to the assessment year. So always previous year also starts from 1st April and ends on 31st March. It also consists of 12 months period only. But which period it is actually? It is just preceding to the assessment year. 12 months period preceding to the assessment year is known as previous year. So hope this is clear. Okay. So in the next class, I will discuss with you more concepts and problems also. There are so many types of problems in income tax. So we will discuss all those one by one. So if you understand this concept, you can mention in the comment section. And if you like this video and my lecture, you can like it and share it, subscribe it too. Thank you.